HCL Technologies, the IT company, did declare slightly mixed results for the Q4 FY21. In fact, the revenue is slightly below our expectations. Revenue growth of 2.5% quarter on quarter is below our 18-hour poll expectations, and they have clocked in a growth of 2.6% YOY in constant currency terms on the revenue front. The EBIT margin is at 20.4%, down from 22.9% quarter on quarter, and the profits have grown or degrown rather nearly 26% quarter on quarter to 2962 crore. Management mentions that yes, there has been an impact of one-time bonus of nearly around 700 crore given to the employees to mark the $10 billion milestone in terms of the revenues. Management also mentions that the new deal TCV has hit an all-time high during the quarter at $3.1 billion, which is up 49% YOY. They are fairly confident of FY22 and they expect double-digit growth in constant currency terms for FY22. Their EBIT margin, they expect anywhere between 19 to 21% for FY22. Management also states that in terms of the new deal TCV, which has hit an all-time high during this quarter, they have won 19 large deal wins during the quarter, which are largely transformational in nature. Their deal pipeline is at all-time high. The deals are broad-based across verticals, across geographies. They have signed deals across verticals including financial services, life sciences, healthcare, consumer goods and manufacturing. And also that nature of the deal includes cloud analytics, digital workplace, cloud migration and cloud adoption have also driven the IT segment revenue growth. If you look at the segmental performance, the IT and business services has grown 4.4% quarter on quarter in constant currency terms. Their engineering R&D segment has clocked in slightly muted growth of 0.7% quarter on quarter, and the products and platforms have degrown 4.9% quarter on quarter in constant currency terms, but it has certainly performed much better on a YOY basis. If you look at the geographies, Americas has done well at growing 2% quarter on quarter in constant currency terms. Europe has grown 0.7%, while rest of the world has grown 13.3% quarter on quarter in constant currency terms. Again, in terms of the deal wins, well, the engineering R&D segment, in terms of the deal wins, the largest deal came in from Europe in Q4, which was from an energy company in Europe. Management also mentions that the engineering R&D revenues did dip on a YOY basis on account of the exposure to some of these segments like aerospace, auto and certain manufacturing clients. The attrition level has come down during the quarter. The attrition level stands at 9.9% versus 16.3%. Their headcount is 1,68,977, and they have added 18,554 headcounts during the year. They also mentioned that they do have plans to hire 15,000 fresh hires across India and across geographies like US and Canada, and their free cash flow to net income ratio stands at 139%. They have declared a dividend of 6 rupees during the quarter, along with a special dividend of rupees 10 per share. That makes the total dividend payout of rupees 26 per share in FY21 itself. And overall, management is fairly confident of for FY22 revenue growth momentum as well as the deal pipeline.